Welcome back, fellow investors. We just completed the fifth positive week in a row to keep this rally going. And it's been a fun rally to follow. It started on October 27th, and today was an up day, especially for small and mid-cap stocks. Now, we can definitely see what's working right now. We see certain sectors and stocks work in the month of November and for the first day of December. To be successful in 2024, I have to find the sectors that are going to work in 2024. And within those sectors, which stocks are going to work. Because the playbook for 2023, I think some pieces to it may work in 24, but I think some stocks are overpriced. And the trick to it is, as a value investor, is finding where there's value, finding where there's some stocks that are beaten down, that have great fundamentals and should rise based on their intrinsic value. In this video, I'm going to evaluate a couple of factors that I think are going to be important to consider in 2024, and specifically go through a process of trying to find good investments in 2024 by looking at sectors, also looking at the size of the company based on market cap, and really trying to figure out where to find stocks that have great value to a value investor, that have prices that are really low, where I could buy those stocks and then see them rise over time. Do me a favor and like my video and subscribe to my channel. I'd appreciate that. I'd also appreciate comments. I'd love to hear your thoughts on which sectors you think are going to work in 24, which stocks you think are going to work in 24. Let's get into it. So looking at today's trading action, today was December 1st. It was a good day. It was green across the board and the VIX went down. Also related to this, interest rates really fell, which was interesting. So most definitely the S&P went up, the Dow went up even higher, and the Russell 2000, which is made up of small and mid-sized cap companies, went up the highest, 2.44%, a definite move in small and mid-sized cap companies. That's really interesting. What's also interesting is that I've put a chart together with these four indexes from the Dow, S&P, NASDAQ, and Russell 2000 down here. And you can see at the beginning of the year, they were trading pretty much in parallel. They were kind of going and behaving together. But you began to see a big disparity between the NASDAQ and the Russell 2000. Just a big gap between the two. And it's gotten even broader over time. Now, the NASDAQ is an index that has a lot of technology. And the S&P is heavily weighted by those Magnificent Seven stocks. They make up 30% of the S&P index. So this has a lot of technology in it, which did great in 23. I owned a lot of technology, happy to do so. But I'm a value investor. And when I see this type of data, I'm thinking there's a lot of quality companies here that are being left behind. There's a lot of pent-up value in those small companies that I'd like to take advantage of. My conclusion is that it's likely that I could find really good value, really good companies whose stocks are undervalued, where I can get those stocks at a discount and then watch those values go up. That's conclusion number one. Small and mid-sized caps are really attractive to me. The other conclusion is that the mega caps and the big NASDAQ technology companies, I think, are overpriced. So I'm thinking of NVIDIA, Apple, Microsoft. Those stocks are overpriced. And the law of big numbers is going to make it very difficult for, let's say, a Microsoft to go up 20% in value. That would be more than $500 billion of market cap. Is that realistic? It's hard to imagine that they could go up that much in 2024. But it's much easier to imagine a $20 million market cap, a $1 billion market cap company going up 20%. That would be $4 billion of market cap. That's not really a big move at all, but from a market size perspective. So that's conclusion number two, that small has great potential. It's been beaten down. And mega cap, I think, is risky, and there's very little upside. I have a long list of small and mid cap companies that did great today. Let me give you a few examples. Zim is a shipping company, very small cap, up 8.8% in one day. Phenomenal. MPW, small REIT, up 7.2%. Phenomenal. Coin, that's Coinbase. That's my number one from a percentage standpoint stock for 2023, up another 7.25% today. And that is a mid cap. Airbnb is a mid cap, but I think they're now considered a large cap, up 6.87%. From a dollar perspective, that was my winner of the day. DocuSign, a mid cap software company, up 6.7%. And I can go on, but I just had winners across the board because I am holding a lot of small and mid cap companies because I believe that that's where the value is currently. And I want to go deeper into that value, find a few more companies and buy into some of these companies that I already own to a greater extent. So small cap companies, based on Fidelity's calculation, are companies that are between $2 billion and $7 billion in market cap. And I know that online, I saw some other definitions of small cap, and I don't want to start an argument, but I would say that, company values have really gone up. And it seemed what I saw online that small caps are valuations under $2 billion. I think there's few companies now under $2 billion in market cap. But this is what I'm going to use. I'm going to use Fidelity's definition and go with it. And the companies that you see in this space, there are a lot of companies, 1,222 based on Fidelity's classification. Companies like Carvana. Carvana was left for dead and they did have significant problems. I think they were almost bankrupt at one point, but they came back and rewarded shareholders 300%. The number one of the small caps went up 466%, just phenomenal. Other companies you may be familiar with is Abercrombie and Fitch, which I believe is a retailer and apparel company, up 216%. MicroStrategy, which is a software company, but they have a huge position in Bitcoin, up 151%. So some really good winners in small companies that can really move quickly. And I'm sharing each size of company so it could drive just ideas of, hey, let me analyze Carvana. Is that the right investment? Does it create enough free cash flow? Does it have a valuation greater than its stock price? It's not a conclusion that, hey, MicroStrategy is a good company to buy. It's just the beginning of the analysis. Finding just ideas that I could then take through my process, value these companies based on free cash, earnings per share, make sure the balance sheet is good, make sure I understand the business and like the business, and then make a decision to buy, hold, or sell. Fidelity defines mid-cap stocks as stocks being the size between 7.5 billion in market cap up to 42 billion. And there's about 991 companies in this category. Companies that I'm familiar with that you might be familiar with as well. Here's Coinbase. And Coinbase has gone up pretty much 300% in 2023. It's been my number one percentage gainer. And it is up 172% over 52 weeks. But it's actually up 278% if you look at the year to date. MongoDB, this is a software company in the database space. The 52-year return, 172%. You still have these huge, here's a healthcare related stock, 465% up. So you have really good winners in mid-cap stocks as well. Again, it's not a conclusion that any one of these companies is an immediate buy. It's the beginning. It's the beginning of putting it through a process and deciding, is that truly a good company? Let's talk about large cap stocks. And Fidelity defines large cap as companies with a market cap of 42.7 billion up to about $210 billion. And companies that are pretty popular, Palantir. But you notice the percentage has gone down, 52 week, 167. CrowdStrike is in here at 101. Uber, that's one of my big winners, up 93%. It's got a really nice, upside to it. Really good company. General Electric made a big comeback, 81%. So these are names that are more familiar because they're larger caps. They've been around longer. They have a bigger name. ServiceNow up 64%, a software company. So just a really good list of quality companies. But as we get to these large caps, we're seeing larger market caps. And again, there's probably good companies to buy on this list, but these may be overbought already. And I would be, careful not to buy into a company where the stock price is already so high. At best, it might trade sideways, or it may go down. And the last size category is the mega cap stock. These are companies that are $210 billion or larger. These are massive valuation companies. And the top one on the stack is Meta. And that's my number one position in my portfolio. I've been a Meta owner for a long time. It's been a great stock for me. I've made the more money on Meta than any other stock. And of course, we have Nvidia, just a superstar company and doing great. Adobe's on the list, and you see these percentages are quite impressive, but they're not as high as those small cap and mid cap stocks. The top performers there were 465%. So you see that you can double, triple your value of a stock much quicker on the small and mid cap companies. They're just lesser known names. You have to do more homework. You have to do more digging. You have to screen more companies. All the companies on this list, if you've been doing business for a long time, you know them all. I know all these companies. I could tell you a quick synopsis on any company at the drop of a hat on this list. And that's why they're so darn popular, is the average investor knows what Broadcom does. They know what Microsoft does. So they tend to be popular stocks. And as Warren Buffett has said, in the short term, the stock market is a voting machine. It's a popularity contest. But over the long haul, it's a weighing machine. We weigh value, and value will always rise over time to have prices of stocks match the value that those companies are worth. So these are the mega cap stocks, just a phenomenal list of companies, and these are blue chip companies. I happen to believe that these 44 companies, most of them are priced fairly. In some cases, they're priced too high. I'll make a statement that I think Nvidia is priced too high. I think the company is incredible, awesome. They just have to grow into a valuation. If they have any type of misstep, or if the AI business doesn't become what people are hoping it becomes, then you're going to have a huge loss of value in Nvidia. I owned Adobe and sold it in 2023. I think Adobe is a great company, but I sold at a really good gain and felt that the stock was priced at a premium, well above the value I calculated. And I decided to sell and take that money off the table. So a lot of the players on this list, and I'll go on to Amazon. I owned Amazon. I sold it in 2023. And it's ditto what I just said about Adobe. I owned Broadcom and did the same thing. Now, doing my homework and buying all those companies at the right dip and then selling when I thought it was appropriate is my strategy, and I'll do it over again. If any of those companies dip far enough, I would buy them again. But I think right now prices are really high in these mega cap stocks. And I expect that mega cap stocks are going to struggle in 2024. So I talked about size of companies based on market cap. My conclusion being that small and mid cap companies, I believe, have pent up value. There's really good value in that space. And large and mega cap stocks may be priced at a premium currently. And I think that they're going to struggle to beat the S&P index potentially, or beat the Russell 2000 in 2024. Now, let me comment on sectors. Sectors being, what are the industries tied to a particular sector and how have they performed? And here I'm looking at the different large sectors of stocks from sorted with the monthly return, the highest to the lowest. And what was surprising when I looked at it was real estate actually for the last 30 days outperformed tech. And I had to really look at that twice and think to myself, holy smokes, how did that happen? But it kind of makes sense. I think real estate's been beaten up by high interest rates. Interest rates have really gone down. In the month of November and even today, interest rates really fell. So the return over the last 30 days has been really good. I own a few REITs, CTRE, and I also own NPW. I've done videos on those two real estate investment trusts, and it's on my channel. But this really tells me, it signals that there's far more value to be achieved in this space. Over the 1 year, it's down 2.99%. So it hasn't even made up all the value it lost over the 1 year. Year to date, it's just up 0.28%, even though it's up 14.91%. So I'm going to investigate real estate further and see if there's some good companies there that I could pick up. Look at companies I already own, like the two I mentioned, and see if I want to buy more shares of those companies. Of course, technology is here, and I do plenty of videos on technology companies, and I voiced my opinion on the mega cap stocks, which is a good factor in this number. The next industry that I'll talk about, I'm going to jump down to the bottom here, is healthcare. Healthcare is one of the big surprises for 2023. A lot of quality companies in this space have been beaten down. They did not keep up with the S&P, and over the last month, it didn't keep up with the S&P. Healthcare companies are a necessity. We have pharmaceutical companies that make a lot of money, generate great free cash flow, and are just doing great. Good example would be AbbVie. And I'm going to dive deeper into healthcare companies and talk about those particular companies. And the last category that I'll go over is financials. Now, financials is really doing well. It is a sector that was beaten up, and now looks like it's in third place on the sector rankings. And this is the space that was beaten up when we had the Silicon Valley Bank collapse, and we had a lot of scare, a lot of fear around banks, financial services, consumer credit. All those things really took a hit, along with a rising interest rate market. So it was really beaten up, and it's returning, really good returns. I saw that one coming, and I bought into small banks, small, medium, and large banks. I bought into financial services and a variety of companies. I did a full video on 7 companies within the financial sector that I'm seeing really perform well in my portfolio. And you can see that video on my channel. I encourage you to see it if you want to see some ideas there around this particular sector. So I'm going to dive deeper into this sector as well. So the real estate sector, you could see how it just dove down in 23. It just got beat up and then it rose, and it's doing really well. Within that sector, and I ranked it based on the last month return. Real estate management and develop was number 1. A lot of the home builders are there, which were big winners in 2023. Industrial REITs, specialized REITs, and so forth. Residential REITs were performed the least amount, but it's green across the board for the last month. And it's also, you see a lot of red just in the 3-month alone. So you see how office REITs are lagging. That makes sense. The COVID restrictions got everybody to go home and work in their home office, and it's been slow to have people return to the office. Residential REITs are down as well, and industrial REITs are down over the 3-month. So I believe, just based on that type of data, that there's probably some good companies to pick up that are on the rise. I can get at a discount. They're probably going to pay good dividends, because in the real estate sector, really good dividends are paid. So I'm going to research that, and I'll make a video highlighting the companies that I think are good companies for me to buy. And I'll put that video on my channel in the near future. Now I'd like to talk about the healthcare sector, and I'm sorting from the best return over the last month. And we've got life sciences, number 1, down to biotech, which is in last place, pharmaceutical, really lagging the S&P, and healthcare providers and services really lagging the S&P. These tend to be real solid investments. You look at the 10-year, look at the 5-year. These tend to be pretty solid, but for reasons that I cannot fully explain, it's been a surprise how it's been a laggard over 2023. But to me, that signals there's probably value in a lot of these companies. I picked up more AbbVie this week, and that's an idea that I have within the space. But like I'm going to do with real estate, I'm going to dive deeper and understand what companies were beaten down, are really good companies, have really good free cash flow, have a very good 2024 projected, and pick up more shares in both companies that I own, as well as maybe adding a few companies into my portfolio out of healthcare stocks. And I'll be recording a video and adding that video to my channel, highlighting the companies that I plan to buy within the healthcare sector. But I believe, based on this data, that there's value in the healthcare sector. And I think the healthcare sector is really going to perform well in 2024. All right. And the last sector that I'll cover is the financial sector, and it's doing really well. You can see from the top being consumer finance. It's for last month, 18%. That's phenomenal. Way outperforming the S&P. Banks are really bouncing back from that banking scare of early in the year. Capital markets, that's where you have companies like Coinbase or other brokerages. They're doing really well. And I think insurance companies are really going to have a good 2024. They've already begun to really perform. If you look at the 1 month and the 3-month, it's signaling that, hey, this is really taking off. But if you look at the 1 year, especially in the category of banks, they were beaten down. And it was really a big scare because 2 banks really went down. and there was a run on those banks. But now interest rates have actually not only stabilized, we've seen a big decrease in interest rates. That really relieves a lot of the risk on these balance sheets for banks. And I think banks have more room to run. They're beaten down quite a bit. They pay high dividends, really like banks. And I did a full video highlighting 7 companies I really like within the financial sector. It's on my channel, and I'll put a link to that video on the description of this video itself. Just going to the graph, you can see that the financial sector had a real downturn into November, and then it just really took off at around October 27th with the rest of the market. But it's just had a really aggressive rise, which is really fun to watch. It's really fun to watch because I bought when these stocks were beaten down, and it's fun as a value investor to see that, yeah, these companies have risen closer to the value that I thought they were worth, and they reward me with that really good appreciation. And this sector pays really good dividends. So they pay a really good dividend as well. So value investing is about trying to find value, trying to find companies that are priced well below their true value. And it's not about seeing what happened 6 months ago and saying, oh, that's what's working, I think I'm going to copy that. It's not that at all. It's really about trying to understand what sectors, what stocks were really beaten down, but the fundamentals tell you a different story. And trying to find those stocks, buying them while the market doesn't recognize the value. And then once the market does recognize the value, watch your investment go up in value. To me, that's really gratifying. And it's part of the overall appreciation of investing for me. I hope you found the video interesting. I hope it caused you to think about how you look at sectors, how you look at the size market caps of companies, and where you think the market's really going to perform in 2024. There's always an up market every single year. The challenge is finding, where is the sector, where are the stocks that are going to rise over the next 12 months? And that's exactly what I'm trying to do in this video. I'm trying to show you how I think about finding stocks, screening stocks, and then making decisions on where I'm going to buy stocks that I expect are going to do well over the next 12 months to 24 months. I hope you found the video interesting. Thank you for watching. Please like my video, subscribe to my channel, and please leave a comment. Thanks again for watching.